Is rolling. I'd like to welcome everyone to the importance of cash flow. We have a presenter from the SCORE Cape Cod area, Jim Danhauser. He's a pro. You're going to learn a lot. So we're very glad to have him with us today. And we have two representatives from the East Cambridge Savings Bank. They are sponsoring this webinar because they know how important cash flow is to a successful business, and they will be able to take questions from you today as well. But as we get started, let's introduce you to SCORE, in case you are not familiar with SCORE. SCORE's main goal is to share information with the small business community, and we do that in 3 different ways. One is through the information provided on the website. Lots of fantastic information. If you haven't looked around on that website, I strongly encourage you to do so. There's templates you can download, not just business plan templates, marketing, cash flow, budgeting, you name it. There's probably a template on there for you to download. Blogs, pre-recorded webinars, lots of great information. We also provide information through our workshops and webinars. We advertise those through the website and through newsletters and on social media as well. So if you want to connect with us through any of those venues to find out what is coming up, I strongly encourage you to do that. One of the most important ways we provide information is through our mentorship program. Our mentors are volunteers. They are donating their time to help the small business community, and they come to us with a variety of skills and abilities to work with you. We work with those that are trying to decide if small business ownership is right for them. We're working with those that are in that planning phase, and we're helping you make sure those plans are make sense and are robust, and so that you can start start things going off well. We're also working with those that are already in business. Folks come to us for help with a variety of different things from any business topic that you can imagine, whether it's help with their cash flow or marketing or work-life balance, you name it. We have someone that can help you either in the chapter level, the district level, or the national level. A beginning session is generally going to be in that 40-minute range-ish. They want to know about you. They want to know about your goals, about your challenges, and they will work with you to formulate a plan to overcome those goals and meet those challenges. When you meet with a SCORE mentor, you're not just meeting with one mentor. They're a team, and they work together, and they will reach out to each other to help fill in any blanks that need to be taken care of. And it's a great team. So I strongly encourage you to get a SCORE mentor. Businesses are more successful when they do have a mentor. And getting that mentor, super, super simple. SCORE.org, blue box, put in your zip code. That will match you to the chapter nearest you. You'll then be asked a couple quick questions, and the chapter will use that information to help match you to the proper mentor. This is being recorded today, and the recording will be available on the score.org/Boston website, and it'll also be available on the Cape Cod website as well. So which is score.org/Cape Cod. For us, it's under the local workshop previously recorded. I will have to get you the link for where it is on the Cape Cod website, but I'll make sure you have access to both of those in a follow-up email afterward. We are going to use that Q&A button on the Zoom bar to keep track of questions you might have. And again, your questions can be to either our presenter or to the bank as well. And we will try and get through as many of the questions as we can. And we will be asking the ones that are relevant to the moment throughout, and then we will save others for the end. So as we get going, I do want to introduce Robert Nichols from the East Cambridge Savings Bank.
Thank you, Teresa. Appreciate that. And thank you everyone for joining the webinar this afternoon. It's great to be back with SCORE. SCORE has been a great partner to work with, and we continue and are willing to provide these outstanding workshops. East Cambridge Savings Bank is a mutual savings bank. We're not a publicly traded company, and we do not have investors. Mutual savings banks have been around since the early 19th century and are still quite common in New England. Our bank was founded in 1854 and has been operating with the same name and charter since then. And East Cambridge Savings Bank has never been acquired or sold to a larger bank. Well, since East Cambridge Savings Bank is a mutual bank and does not have shareholders, the bank tends to reinvest profits locally through mortgages, loans for small businesses, and supporting nonprofit organizations. Back to you, Teresa.
Thanks, Robert. Okay, well, I'm going to introduce Jim Danhauser from SCORE Cape Cod, and he's our presenter today for cash flow.
Thanks, Teresa. Thanks, Teresa. Sorry, folks, I'm dealing with a little bit of the late winter colds, but that's the way it goes. I'll do my best to get through this without scratching too much on you. As Teresa said, I'm Jim Danhauser. I'm volunteer with the Cape Cod and Islands chapter of SCORE. In terms of background, my career started as an attorney. Then I moved into investment banking and financial advisory work. I became CFO of a private company in the early 90s. We grew that and eventually took it public. I was with them until 2006, and then did some work with private equity, investing in small businesses, and then fully retired. So I know full well the full life cycle of small businesses and the challenges that they inevitably face. What we're going to cover today is a brief overview of financial statements. I'm going to touch on that very quickly. I'll touch quickly also on startup costs and budgeting. Spend most of my time talking about cash flow statements and cash flow forecasts and the imperative need for you to manage your liquidity. So why do you have a financial reporting system in whatever form you have, whether it's QuickBooks, you use just checkbook or anything else? Well, the goal is to make sure that you gather accurate and complete information in a timely basis. Why? Because that's the only way that you can put yourself in a position to make better, smarter decisions about your business, whether it's profit or nonprofit. It's important that your information be accurate and complete, because if it's not, then you'll find yourself making decisions with false assumptions in mind, and that can get you into trouble. Always avoid garbage in, garbage out. Quickly, what are the basic financial statements? Well, there are three basic ones. The income statement, which is also called a profit and loss, that shows the results of your business for a defined period of time, typically a month, a quarter, or a year. A balance sheet, unlike the income statement, speaks as of a specific date. For example, it might be 12/31 of a given year. That balance sheet is a snapshot of what the business owns and what it owes as of that date. Its assets and its liabilities, the balance being its equity. The cash flow statement, like the P&L, speaks as of a period of time, but it shows where the business's cash has come from and where it has gone over that period. And that is far and away the most important financial statement for a small business. You'll also see a situation in which we'll talk a little bit about a budget or a forecast that reflects a performance over the next period of time and is a similarly important document from a cash flow perspective for small businesses. In terms of startups, all startups need to prepare a cash flow budget, which shows how long it's going to take them to get to a break-even basis, covering all of the expenses of development, planning, and getting ready to operate. You need to make sure that there's enough cash available to reach break-even. Now, and that should include a contingency, because in my experience, nothing ever happens exactly as or when you expect it to happen when you're dealing with a small business. Now, we do have other webinars which will focus exclusively on startups. And if you are in that position, then I would encourage you to take a look at those before you get going too far down the road. So what is a cash flow statement? Well, it's going to show you how much cash you have, how much cash you need, and you also want to test it for reality. And we'll talk about how you use it to manage your business. There's a very good blog about cash flow statements, which you can see referenced right at the bottom of that slide right there. And that is a very useful blog for you to get a very quick understanding of how you calculate cash flow. What is cash flow? It is very simply the movement of all cash that comes into your business and all cash that goes out of your business from all sources: sales and collections, loans, purchases and sales of assets, etc. It looks at these inflows over a specified period of time, typically a month, a quarter, or a year, and you should develop the discipline of looking at it at least as frequently as monthly. Now, Teresa mentioned all of the templates that are available on the SCORE website. One of them is a 12-month cash flow template. You go to www.score.org, click on templates and resources, and you will see that cash flow template. To give you an example of it, right there. As you can see, if you can see the entire page, I'm going to try to do this again. Hang on a second. Okay, there it shows you all the cash that comes into your business over that period of time, whether it's from cash sales, collections of receivables, or other. It shows the cash that was paid out from your business over that period of time from all sources, whether it's payroll, et cetera, et cetera. Very complicated as it looks, but it's actually very simple to do. And there are attached instructions when you go to that website to find it. So it's a very useful document for you to take a look at.
Hey, Jim, can you go back to that, the blog that you mentioned, and so that
Sure.
folks can see that
And
address?
recognize that you'll be getting the link to this recording. And as you go through that recording, you will see the slides. So you will be able to get to capture that, that blog link when you go and look at the recording.
Thank you.
All right, you've heard it more than you'd like to hear it. Cash is king. There's a reason that everybody says that. It's because it's true. Most failures for small businesses can be traced to liquidity problems. Running out of cash is simply death for a small business because you don't have anywhere near the various options to deal with it as larger enterprises do. I used to tell people that worked for me that we could survive anything so long as we didn't run out of cash. So make sure that you stay on top of your cash resources and that you stay on top of your needs in order to avoid a liquidity crunch. There are some very simple practices that you can employ that will help you in managing your cash and staying on top of it. We strongly encourage you to keep a separate bank account for your business. Don't commingle it with your personal affairs. Run all of the receipts and expenses of the business through that business account and none of your personal expenses. Why? It is the easiest way for you to quickly monitor the cash in your business, to see right away the inflows and the outflows. The old days, I used to say you could look at your monthly statements. Well, now every bank, you can go online and look at the ebb and flow of money into and out of that account. I have clients from time to time who don't do that, and it takes a significant amount of time to decipher what's actually going on with the business. So I strongly encourage you to do that. And your accountant will thank you very much because it makes tax return preparation a lot easier. I'd also suggest that you consider having a separate credit card for your business if possible. And again, use that only for business expenses, not for personal expenses. And all of your business expenses should go on that card. Again, it's an easy way to keep things separate. It also helps you to begin to establish credit for your business. People have said to me, well, I could have a debit card, and you can. But there may come circumstances in which you need to buy additional inventory, for example, or additional supplies. and you don't have the adequate cash to cover it, if you have a credit card for your business, you could use the credit card to cover that purchase. It may be the only source of financing available to you. But be careful. Not only is it oftentimes the only source of credit, but it is far and away the most expensive. So you should not run up big bills on a credit card. You should pay them off as quickly as you can, but it can be useful to have available to you. You should look at your cash flow statement at least monthly. And we're going to spend a lot of time talking about this. You should keep a cash flow forecast for the next 12 months and keep it updated, because that's the only way that you can really tell what your cash situation is over the forthcoming period. Circumstances will change, and you need to make sure that you do everything you can to stay on top of those. You should also maintain good accounts receivable collection practices, and we'll talk about that, and try to overdo it on supplies, inventories, and equipment. Everybody wants to have the full supply of everything they need, and that makes a great deal of sense, but be careful. I've seen many retail shops get into cash flow problems because they overstocked on inventory. All of those things eat up cash, so be prudent in how you approach them. I mentioned a cash flow forecast. You should be preparing one each year as part of your annual budgeting process. And I'm going to walk you through 2 examples of cash flow forecasts to show you just how easy it is actually to do that. And you should update that forecast every month or more frequently if you have to, so that you show what actually happened and anticipate what will occur over the immediate term and over the next 12 months, because you may need to take certain steps to deal with unexpected shortfalls in your cash flow, because things change and you need to reflect the impact of those changes. You simply cannot make smart decisions about your business. And what are those decisions? Well, should I hire people? Should I buy equipment? Should I take on work? Everybody likes to grow, but growth always requires an outlay of additional funds. Useful, but make sure that you can afford it. You may need to reduce expenses. You can't make any of those decisions unless you can see what your cash situation is going to be over the next 12 months. And always bear the seasonality of many businesses in mind. I tend to be hyper-focused on that because it's very important to businesses on Cape Cod. People all feel great in May, June, July, and August as the business is flowing in. But in my experience, at least to date, every year has also had a January and a February, and things are much slower then. So you need to make sure that you're taking account of the needs you're going to have in those periods for cash resources. And if you see a shortfall on the horizon, take steps to deal with it early. Don't wait, because things rarely get better with the passage of time. Business problems tend to have a geometric function. They get worse more rapidly before they get better. So you need to take action. Seek working capital or other loans. You may need to reduce expenses. You may need to reduce staff. You may need to delay purchases or accelerate collections. You may also need to consider meeting with parties that you owe money to and explain your situation and when payment will be made. But be careful, because if word starts to get out that you're having real problems, you may find it difficult to have people supply inventory and machinery to you. So take any of those conversations guardedly and only with people that you're confident in. And you should try to keep cash reserves and or establish a working capital line of credit to help you to deal with the shortfalls. So I'm going to show you a cash flow forecast that was put together by a business back in 2020. You can see that this is a business that anticipated, it started out the year with $51,000, anticipated ending the year with almost $108,000, so doing quite well, bringing in $275,000 in cash and spending about $218,000. So all looks very good when you look at this forecast. Well, now, as you roll forward, you put in the actual results as they occur, and you can see those are shaded in gray. Well, what happened? Suddenly in April, the bottom fell out of sales. Now, this is an example, obviously, and it comes from the pandemic year, so you can understand what happened. But if you didn't have a cash flow forecast that you could update, you'd be in a position where very rapidly you would get into a negative position, as you see they got into in July. So what can you do? Well, you go in here and you look at what your expenses are. Maybe you don't take a draw for a while in order to get yourself into a better position. Maybe you have to let people go because you need to make sure that your business survives. Those are hard decisions because you're dealing with people's livelihoods and their lives. But you're not doing anyone a favor if you don't take any steps, because then the entire business will be in trouble. Maybe you don't spend this extra money that you were planning for marketing, but you would not be in a position to take any of these steps if you did not have a forecast in hand. Now, this forecast looks complicated. It really isn't, but I can understand how if you're new to Excel, you may not be very comfortable doing that. So I'm going to show you a simpler form, which is an easy cash flow forecast. And I'm going to tell you how easy it is. There's a YouTube video, and I'm a firm believer that if you have questions you can't answer, use Google and YouTube. There's more answers out there than you would imagine. That video that I reference at the bottom of this page, How to Accurately Project Cash Flow, Your Complete Guide, can enable you, if you follow it, to set up a cash flow forecast without the numbers, but with all the formulas in place, literally in 7 to 10 minutes. And it's very worthwhile doing. I'm going to show you some examples of why you do it yet once again. This is a business that started with $20,000 in the bank. It ended with $11,000. Obviously, it's not a very big business, but the examples are worth looking at. Things look great. They're still okay. But look what happened in March. There's suddenly $11,000 in the hole. How did that happen? Well, you can see they start to stock up on inventory, probably in anticipation of the season. Well, if they had a forecast in hand and knew that that inventory purchase was going to put them in the negative, they would have taken different approaches. They might have delayed that inventory purchase, or they might have tried to purchase it on credit, because oftentimes that's one of the easiest forms of credit available to a small business. Or they simply might have bought it on a credit card. But that is a situation that you would put yourself into a negative cash position if you didn't know it was coming and you made a decision like that to buy that inventory for cash. Similarly, you can see that in June, this business went negative again. How? Well, they made a $20,000 equipment purchase. Again, not big numbers. You can probably deal with a $4,500 cash negative in a lot of different ways. But you wouldn't have to be in that position if you didn't buy that piece of equipment, or if you bought it on credit. And many times, equipment sellers are the most ready form of leasing or financing credit to a small business. So again, very simple forecast, well worth spending the 10 minutes to learn how to put it together. And it helps you to make smart decisions about your business and to avoid, just as importantly, making dumb ones that put you in a bad place. Accounts receivable. Now, this is a big issue for many small businesses, and it causes as many liquidity problems as almost anything else. You may be in a good position and not have accounts receivable in any consequential way. Maybe you run a restaurant or you run a retail shop. If so, good, because accounts receivable can be a very big problem and particularly can take up a lot of your time. So it's important to develop and maintain good practices. What do those include? Timely billing. I can't tell you the number of clients I've dealt with who simply didn't get their bills out on time. Well, people aren't going to pay you if they don't get their bills. So get them out as soon as the work is done, clearly states what's been done and what's owed and when the payment is due. Most accounting systems, whether that's QuickBooks, Wave, or any others, have invoicing tools which makes it very easy to get your invoices out. It also helps you to track your payments efficiently, and it integrates with your accounting system. So use those tools if they're available. If not, develop a form of an invoice and make sure it gets out on time. I would suggest that you consider sending those invoices both by email and regular mail, and make sure that people understand how checks should be made out and where they should be sent. Simply do not make it harder for your customers to pay you on time. If you're taking online payment by credit or debit card or by bank transfer, add the instructions for that. And I would encourage you to do that where you can, because it helps to facilitate payments on a timely basis and limit issues that you might otherwise have with accounts receivable. And if you have a lot of receivables, I would encourage you to have somebody in your organization get to know who at your customers is actually making the payments and communicate with them regularly. And you should monitor the collection process. Get reminders out when payments are late. Have somebody in your organization reach out a couple of days after the due date. People always ask me whether they should consider suing or what other steps to take in the event of serious delinquency. Well, the first thing I would suggest is that you don't continue to do business with customers who aren't paying you. If there's a serious delinquency, you can send a formal letter and you can consider legal action, including small claims court. I have a client who regularly goes to small claims court if they're not paid, because they do not want a reputation that they are not going to be getting paid. But there's an expense involved. There's time, there's a small amount of money. And I would tell you that in many circumstances, you're not getting paid because the debtor can't pay you. So check on their ability to pay you and be prepared to make a deal to collect what you can before you worry about proceeding. A couple of other suggestions about accounts receivable. You might consider early payment or pre-payment discounts for customers. Now, I've had back and forth with some clients on this from time to time. They say they offer people a big discount and people pay the lower amount, but they still don't pay on time. Well, I'm not suggesting you offer a 50% discount, but a 5 to 10% discount for a prepayment or early payment can be very useful in getting accounts receivable paid. I have someone who does the irrigation system from my yard. Each year in March, they offer me the ability to pay at a 10% discount and pay the full year's expected ordinary maintenance. And I go ahead and do that. They do it because they avoid the receivable, but they also get an influx of cash during what would otherwise be a slow period for them. So these are things that you consider because it makes it easier for you. And if you're a service provider, I would encourage you to start using Square or other forms of taking credit card payments on the spot. It's a fellow who comes and clean my fireplace. He doesn't do anything without getting paid that day. He just has a Square with him and he gets a credit card payment. So he doesn't have receivables to deal with at all. Yes, he pays a fee for that. But on the whole, he feels like he is far ahead by doing that than he is by having to continue to monitor receivables and deal with them on a going forward basis. You might also think about getting credit card authorization for regular customers and charge the card after the invoice is approved. But be careful, because you need to safeguard that information if you get it. And if you're in a construction business, for bigger projects, establish an upfront schedule payment that works for you. Get as much upfront as you can and make sure you get paid for supplies before you go out and use your cash to buy them. Because otherwise, you're going to find yourself with a potential cash flow problem. Other working capital tips. Well, what is working capital? It's a fancy accounting word. It simply looks at your current assets, cash and receivables, compared to your current liabilities, your payables. That's working capital. You always want to have positive working capital. Avoid overbuying inventory, supplies, and equipment, as I mentioned before. Always make your purchasing decisions with the impact on cash flow forecast in mind. and pay your accounts payable on time, but don't pay early. I know everybody wants to be the good customer to make sure that they're going to get the materials that they need or the inventories they need when they need them. But if somebody's giving you 30 or 60 days to make a payment, use it. There's no need for you to lay the cash out any earlier out of your business or nonprofit than you have to. And do not use tax withholdings or sales or meals taxes as your cash. I've seen clients do this from time to time. They say, look, I'm having a slow period. I've got these tax withholdings that I haven't paid over yet. I'll be able to make it up when things get better. And then they don't. It's a big problem. It's not your money. You expose yourself to potential criminal liabilities. So if you have employee tax withholdings or sales tax withholdings or meals taxes, pay them over to the property authorities as and when they're due, and do not consider that cash to be yours. Financing. It's obviously a very important part of the picture from cash for a small business. There are lots of different sources of financing that may be available to you, and you see some of them listed here. People always talk about family and friends as the way to get started. And that really includes more than just, the people you may go and have a dinner with. It's your circle of contacts that you may be talking to. You'll have personal savings and assets, including retirement funds. You are able to tap into retirement funds, but recognize that if you have built a nest egg, it has a reason. And don't use that unless you're very comfortable that you will be able to withstand the loss, because many small businesses don't make it. And you would be then in a situation where you might have impaired your ability to have long-term financial security. I mentioned credit cards and equipment financing earlier. Bank loans. Well, banks, especially the larger money center banks, are very difficult in terms of availability for loans for small businesses. Very focused upon your credit rating and your business itself. I would recommend that you deal more with community banks and similar institutions. And I would also encourage you from the beginning, when you set up that separate bank account for your business, to meet with a bank officer, explain what your business is, talk about your business, and meet with them periodically. Banks are always very happy, especially local community and neighborhood banks, to hear from local businesses. And if you end up needing a bank loan, you're in a much better position to have a positive conversation about that. If you have established a working relationship with your bank, as opposed to walking in cold and saying, I need a loan. SBA financing is readily available in certain programs, and you should certainly consider that. It's very easy to take a look. You can go on the SBA website, that's www.sba.gov, and go on their lender match feature that they have on that website. You enter your information, and then banks who participate in the program can take a look and decide whether they would be interested in extending financing to you. Online lenders, there are a multitude of these, and they are readily available to small businesses in certain circumstances. Funding is generally easy. It goes right into your bank account. But be aware that these are expensive sources of financing. Why? Because you will pay both a fee and an interest rate. And that fee will not be spread over time. So you may pay a 1% fee, which significantly increases the cost of these online lenders. But they are available sources of financing that you should certainly consider if you find yourself in need of a loan. I reference crowdfunding here because people talk about that a fair bit. Don't kid yourself. Trying to get crowdfunding requires significant effort and time. It is much more suitable for things with special stories, like healthcare needs or very special businesses. It can be successful, but it is a time-consuming effort, and you're much better off, in my view, trying to see if you can secure financing through the SBA or through a traditional bank loan. So as I said, I would encourage you to establish your banking relationship early on, even if you're not getting a loan. You should deal with your merchants and seek to get merchant credit for supplies. When you're talking to a bank, you may also look to working capital financing. What does that mean? Well, again, it is a situation in which a bank will say, okay, we will make a working capital line available to you of up to $X. You can draw it as you need it for your business to deal with short-term needs for cash. You will have to pay it back, and you will have to leave it at zero for at least 30 days in most circumstances. But it can be a very useful thing to have if you find yourself in a situation where you don't have adequate cash reserves and you find yourself in need of cash. And continue to work on establishing a good track record for your business for any future financial needs that you might have. And with that, I'm happy to answer any questions that anybody might have.
Okay, I just got one. How to forecast cash needed for a service-oriented startup in the first 6 to 12 months?
Well, the one thing you'll know is what your expenses are. Well, you should certainly have a good handle on those. Whatever the service business is, let's say, for example, it's a landscaping business. Well, you need to going to have certain equipment. You need to have something to go from place to place, which is a van. You're going to need to have some kind of supplies. And you're going to need to figure out what cash, if any, you need. You're going to need some form of fuel for the van. You're going to need insurance. So you sit down in your service business and you look at all of the expenses that you're going to have to incur over a period of time to get started. If you have any question about what they are, most businesses, you can go online and find a fairly good representation of what the startup expenses are going to be in most businesses. And I would encourage you, if you have questions, to then go and talk to a SCORE mentor to get a reality check about what those expenses are. So that's the expense side. Then you need to figure out what you're going to get from a revenue side. And there, you can look around to see what other similarly situated services businesses are doing in your area. And take a look at how long it took them to get there. And again, do a reality check with other people that you know, and potentially with a SCORE mentor. So it's the expenses part that should be the easiest for you to get your arms around and to understand most completely. And once you do that, you'll have a very good understanding of what your cash needs are going to be.
Does the bank care about how important is cash flow to the bank when you're seeking a loan?
I'll let the bank talk to
Yep.
it, but if they say it's not the most important thing besides your character and credit rating, then they're not telling you the truth.
All right, Seth, it's all yours if you'd unmute.
It's the most important thing besides your character and your credit rating. So listen, at the end of the day, the bank makes loans based on the ability of the borrower to repay. And whether that's on historic financials that you provide us with tax returns to show that your business makes enough income to support repayment of the loan or the line of credit, or if you're a newer business, projections that show that what you're going to do over the next 24 months is going to create a business that's going to be supportive of the debt that you're looking for. That the bank will take collateral, but we don't want it. What are we going to do with the inventory or the building or anything else? What we want is to make a good loan to somebody who will pay us back. Our business is interest. We make interest on good loans and good lines of credit to help businesses use that cash for leverage to grow the business. So cash flow is the most important thing, for sure.
And I would also say that if you typically for a small business, you should expect that if you take a bank loan, you're going to have to provide a personal guarantee. That is not because the bank is anxious to come after you personally to sue you. It is because it is the ultimate expression on your part of your confidence in your ability to repay the loan. I remember when the first time I had to do that, it was a little bit daunting, but we did it because it was a necessary element. So just be aware of that reality when you're thinking about pursuing bank financing.
That's a good point.
When,
I'm sorry, go ahead, Teresa.
go ahead. No, go ahead, Robert.
That's a good point, Jim. One other thing I want to make sure everyone knows is that not only will banks require last year's tax returns, but we'll definitely want year-to-date financials. So say we have last year's tax returns and it's already maybe July, we would want January through June current year financials, which includes a P&L and balance sheet. So we can see how your business is doing this year, because if we just have tax returns from last year and things look great, well, this year things might not look great. So just one thing to note.
The other thing the bank is going to want to see is that you really understand your business, that you have done the right strategizing about your business, that the plan you have put together is something that you have confidence in, and that you have the relative competency to actually perform. So you don't just go ask for that loan willy-nilly. Get yourself prepared if you want to maximize your chances for success. Banks are very happy to work with you, and these gentlemen who are on with us today are perfect examples of that. But you maximize your chances of success if you're professional about the approach.
When the business requests bank financing, could outside sources be considered to support cash flow if historic financials do not fully support?
Well, I'll let the bankers speak to that. Each bank might take a different approach to that, but I assume they're going to have to be very comfortable that the outside financial source is actually truly available.
So yeah,
That could be.
Oh, go ahead, Bob.
Oh, well, I mean, I'm thinking, just look at the question, that could pertain to a universal cash flow. So we'll definitely look at the guarantors, maybe W-2 income or the financial statements, that sort of thing. So if there's anything else, maybe Seth, that you can add up. So that's what I see from the question.
So sure. So listen, a business loan or business line of credit is made to the business, and we want to make sure that the business itself has the capacity to repay it. If you're really close, like we have a 1.20 debt service coverage requirement, you got $1.20 of net income for every dollar of debt that you're trying to pay, and maybe you're at 115 or you're super close, but you've got terrific W-2 income and you have some other things. It could be used to mitigate the weakness of a number that maybe doesn't quite get there. But generally speaking, a bank is going to want to know that the business it's lending to, that enterprise, is creating enough revenue to support the loan repayment. Certainly, we'll look at the big picture. But take the extreme example. You have a business that you haven't started yet, but you're about to, and you want to take a loan out, but you don't have any income, but you have 200,000 in W-2 income. That's not a business loan that's appropriate. You're looking at something else, like a SBA finance startup enterprise or something. So no, the business has to cover. It has to cover.
Or a personal loan that you then turn around and invest in the business, but that's not a business loan.
Yeah, so that's a good point, Jim, because there are some people who, for example, want to buy into a medical practice. You're a dentist. There's a group of 5 dentists. You want to join and to be a part of that practice. It's $100,000. You say, I want to borrow that in the name of the practice. Well, it's not really a practice loan. It's your loan to get into the practice. It's a personal loan request, not a business one, unless all 4 other partners want to sign on to your loan, which would be fine with us. But
unusual.
Unusual. So, but this is a case where, listen, we have, Robert and I have conversations like this every day, and we love noodling over, all right, what's your idea? What are you doing? How is your business? What are your plans for it? What's other income? What's a potential partner? It'll take us probably 10 or 15 minutes to go down those paths and say, okay, look, this is what you're looking for. This is your opportunity. This is your challenge. This is what it would take to move ahead. And any banker worth their salt is going to take that time for you. Because what we enjoy is helping businesses. You know, we don't get anything for not helping you. I mean, we get stuff for helping you. So that's what we'd like to do.
But as you can hear from this discussion, it's why I suggested you really want to be dealing with local and community banks, because you will not get that same reception. And I apologize to all of my friends at the money center banks, but you will not tend to get that same reception there unless you happen to be very fortunate.
Okay. Seth, I do have a request for your contact information, if you wouldn't mind throwing that in the chat. Our next question is, we're a consulting business and we often have to wait a while to bill. When we bill, we get a large payment all at once. Are there any good tools or practices to manage those time lags?
Well, there are several. First is you might consider, instead of just getting payment at the end, establishing some kind of a payment schedule. So that, whether if you're a consulting business, for example, is it a fixed fee consulting business? Are you paid on an hourly basis? And, you could perhaps provide that you would get certain payments along the way in terms of progress payments, because otherwise you're in a situation where I elegantly call that the lumpy revenue business. And so, there's one thing you can do is in dealing with your customers to try to get some kind of payments. I recognize that can put you at a competitive disadvantage, so you may not want to do that. If that's the case, then your best solution is going to be a working capital line of credit. If you have a proven track record of a successful consulting business, where you are able to demonstrate that you have a regular pattern of ultimately getting payments, then having a working capital loan in hand would be a situation in which you'd be able to cover your expenses in the period of time that you're waiting for the bigger payments. I don't know, guys from the bank, whether you have a different perspective or not, but that would seem to me to be the two ways that you might deal with that.
Yeah, that's right, Jim. I mean, I was my first I was going to say line of credit, obviously.
Will banks load money to a business that has a break even that is 12 months away?
So
Maybe.
that's not profitable right now.
That's what I'm
profitable.
taking from
Yeah.
it,
Okay.
yes.
Yeah, that'll be that's the challenging part, because banks, any bank wants to see profitability. I mean, cash flow is important too, but we'll want to see profitability, and you'll need profitability to pay the loan.
You
pay the
may have the
interest.
ability, if you have assets in that business, to get an asset-based financing. And that's a circumstance in which you would be well advised to look at the SBA programs that are available. Go to SBA.gov, go to the lender match, enter the information about your business, and you'll see whether banks are going to be prepared to take a look.
How large of a cash reserve is a good rule of thumb?
The bigger, the better. Most businesses, you'd really like to have 6 to 12 months of operating expenses covered.
I do have a question about the area that East Cambridge rents loans to or works with. What is the area East Cambridge works with?
Typically within our footprint, we primarily work out of, but that's not to say that we can't look at something that's outside of our footprint. But being that's Cape Cod and the islands, potentially it would be quite challenging, because it's quite a ways away from our footprint.
So, right. So CRA assessment area is what defines, generally speaking, where banks can lend, and ours is surrounding our 11 branches. So you're talking about Somerville, Cambridge, Arlington, Belmont, Lexington, Woburn, Malden, Medford, Chelsea, Lynn. that sort of, Stoneham, Wakefield, that sort of general area here in Eastern Mass is our footprint, and predominantly where we are able to have good, strong relationships.
If you're outside of that geography, and I recognize that, people maybe from Rhode Island or elsewhere in Massachusetts, there are similar institutions in most markets. And if you have any question about who they are, again, you could talk to your local SCORE chapter, and they have experience dealing with those lenders. On the Cape, there's several institutions. There's Coastal Community Capital, which is a good, what we call alternative lender. They deal with SBA programs. Southeastern Mass has Seed Corp. But again, I would encourage you to talk to your SCORE mentor in your local chapter, and they can identify for you the institutions that you might reach to if you're outside of the bank's geographic area.
Yeah,
in
and
order
Robert
to-
and I know
oh,
bankers all over too. So if you get a hold of us and we know somebody down there, we'll shoot you some contact information.
Okay, great. Thanks, Seth. In order to examine cash flow requirements, it might be helpful to create a demand forecast. What tools are available to forecast demand for a particular product or service, especially if seasonality is involved?
Okay. Well, the first thing I would tell you is that we do a webinar on business planning, which looks to the business model canvas. That's available on the SCORE Boston website. It's available on the SCORE Cape Cod website. That gives you a lot of information about how you can estimate what it is that you can expect to achieve by way of revenues. And that's what demand is. You can look to other similarly situated businesses in your geographic area. Go to bizstats.com. You can, again, talk to a SCORE mentor. I sound like a broken record, but we are great resources of what's going on in your particular market, and we can help you to identify what the demand would be. But primarily, you're going to look at what other people are doing in a similar area in your geography, and that will help you to identify what the demand is going to be.
I think that covers all the questions that have been submitted. So I want to thank Jim, Seth, and Robert for a great discussion following the presentation. And again, we'll be sending out an email follow-up on how you may reach out to either SCORE or East Cambridge Savings Bank with any questions you might have. Let's see, did I just get another question? Hold on one second. Okay, no, it's not. It's just a comment. Okay, all right. Well, thanks everyone, and have a great rest of your day.
Thank you.
Thank you.